Hey guys, welcome to Money Matters Daily, where we go through the news of the day and try and summarize it for you to understand in a few minutes. Let's get started. Okay, so let's break down this Go First story really quickly. Now, Go First or Go Airlines, which is a Warwick Group-backed company, has filed for bankruptcy in front of the NCLT, the National Council Law Tribunal, which effectively means that they're unable to meet their liability payments, most recently because they are unable to meet the payments due of 1,200 crores to vendors and 2,600 crores to aircraft lessors, which is basically the foreign companies from which Go First was leasing the airlines. Now, what they've cited especially is that they are unable to meet their liabilities of 11463 crores. So about 114 billion rupees. Now, why have they reached this position? Simply because they have about 54 Airbus A320neos, all of which were using Pratt Whitney engines. And as they've repeatedly cited, these Pratt Whitney engines are faulty, and as a result of which a large proportion of the airline's fleet have been grounded. And so they're unable to sort of keep anywhere more than 50% of their fleet consistently flying, and as a result of which they're consistently taking on losses. Now, where will this end? It appears that an external PE fund will probably come in to rescue them, or the Warwick Group companies will reinvest fresh capital into the airlines to keep it running. But hopefully there's a positive resolution to this story. Okay, so here's a really interesting story, if only because it highlights the inefficiency of public sector units in government-run businesses. So BSNL, which is the public sector unit telecom provider, is spending 15,000 crores to install 4G across 100,000 sites. Here's the thing though, the two leading telecom players in the industry, which is Jio and Bharti Airtel, are rolling out 5G. And even the private sector player that's lagging and nearly insolvent in Vodafone Idea already has 4G rolled out. So, I mean, this seems like an extraordinary waste of money to me. They're expecting a 20% improvement in revenue, but I don't see how that would happen, given how cheap data already is in India and the quality of existing telecom players. So, bit of a shame that they're wasting this much money. Okay, so let's break down this 2,000 rupee note demonetization story. So the first thing to note is that the RBI Governor Shantikanta Das has clarified that this is not a demonetization of the 2,000 rupee note. It's not that the 2,000 rupee note is not legal tender or will not be accepted. It's still legal tender. It will still be accepted by all relevant authorities. It's just simply being withdrawn from circulation, and they only account for about 2% of the 180 lakh crore bank deposits. So replacing them with 500 rupee notes should not be particularly difficult. In addition to that, holders of the 2,000 rupee note have till 30th September to exchange their notes. And the economic impact as well is expected to be much smaller because the total proportion of digital payments in the economy is a lot higher. The most cash-intensive sector of the economy, which is farm commodity purchases, particularly for the Rabi harvest, is mostly over. In a really nice piece of positive news, the Airports Authority of India has recorded a 3,400 crore profit, after the depths of the pandemic. So one of the most interesting pieces of news today is that every single Adani stock has hit upper circle. And all of this is driven by the report that's released on Friday by the special panel appointed by the Supreme Court. Now, the purpose of that panel was to investigate if there was regulatory failure in dealing with the Adani Hindenburg report. And the key finding has been that there was no regulatory failure. And that's being seen as a substantial positive for all the Adani stocks. So let's just very quickly refresh what the key conclusions of the Hindenburg report on Adani were. Number one is that the Adani stocks are very overpriced. The second one is that Adani Group stocks were highly indebted. The third one was that Adani stocks do not comply with the minimum public shareholding requirements and were using opaque foreign portfolio investors to hide the Adani individuals' holding of their own company. The fourth key assertion by the Hindenburg report was that there were rampant related party transactions in Adani Group stocks in order to manipulate the share price. And the fifth key conclusion was there was widespread accounting fraud in the Adani scripts in order to hide their true financial position. Now, some of these conclusions have been addressed, others have not. So let's go through what the report prepared by the Supreme Court panel has to say. So the first is that Adani stock valuations have corrected substantially from their highs as the market has repriced Adani stocks. So let's take three stocks as an example. Adani Enterprises, which pre-Hindenburg report was trading at 3,300 levels, crashed to 1,500 levels once the Hindenburg report was released. And even today, after hitting upper circuit 20% up, is only at 2,300. Adani Ports, which was at 770 pre-Hindenburg report, fell to 460 and has recovered now to 720. And Adani Wilmar, which was at 570-600 before the report, crashed to 370 and is now at 450. So some key sort of pieces of news related to these stocks has been that there's been a significant cash infusion as fresh equity has been issued to external investors. Some people might recall that there was an FPO that was oversubscribed and then withdrawn, but most significantly, GQG Partners invested $2 billion into a variety of Adani Group companies to reduce their overall leverage levels. The report once again points out that there is no evidence of related party transactions not being investigated by SEBI, and they're also pointing out that the FPIs that hold Adani stocks are compliant with SEBI regulations, and as such, there is no regulatory failure. But what they also note, very importantly, is that SEBI is still investigating several of these 13 or 14 foreign portfolio investors that hold a substantial portion of the Adani Group company's stock. And the SEBI is still investigating several possible related party transactions. So while it's positive for the Adani Group companies that there has been no prima facie regulatory failure, it's not clear that they are out of the woods, because a lot of the FPIs that hold Adani stocks are still being investigated by SEBI, and a lot of the transactions that were highlighted by Hindenburg are still being investigated by SEBI. But how this plays out, we'll still have to see. So markets were mildly positive today, with the Nifty up 0.6% and the Sensex up 0.4%. Our biggest gainers were the Adani Group stocks, Adani Enterprises in particular, as well as Muthoot Finance and Balakrishna Industries. And our top losers were Sensex and Glenmark. But broadly speaking, a positive day for the markets. And hopefully you found our Money Matters Daily fairly interesting and useful. To stay up to date with Indian financial and market news, please like, share, and subscribe. And we'll be back tomorrow with more news and more information for all of you guys. Thanks.